I think I'm on, right? Somebody confirm for me. I'd appreciate it. Cool. All right, I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here, added on to a couple of longs. Got this root from today, got a little of this PDSB. Traded a couple other things today that I liquidated by the close. Let's talk stocks. Actually, just give me one quick second, if you guys don't mind. Just give me one quick second. Sorry, just one quick second. All right. All right, so how did we close today? S&P's down 0.45%. The Qs are down 0.4%. And the IWM, a little relatively strong to be flat on the day. So let's talk about our markets. You know, today was an interesting day to me because, you get these days sometimes where it's like, you can be really frustrated because it's like, oh man, the market feels like it's barely down. This is actually kind of how I felt yesterday or the day before. I was a little frustrated from the last two trading sessions, down a little bit on the week coming into today, and was definitely just, feeling a little bit frustrated the last couple of days because it's like you look at the SPY and it's like, wow, I think like yesterday I was like, wow, I lost money. Like some of my swings are down just like really big today. I actually made a little bit day trading yesterday, but my swings were down pretty big, so I was right on the day. I'm looking at the S&P, and I'm like, the S&P's down like 0.15% here at the end of the day. How is it possible that I bled out P&L like this when the S&P didn't go down? Obviously, the Russell, we know, was a little bit weak the last couple of days and broke below that kind of key 225. Today, though, honestly, today felt like the complete and utter opposite to me. A lot of the stocks that I'm in, especially the swings I'm in, performed really well. On top of that, my day trading was pretty on point today. So, I always got to be honest with you guys. I have no problem at all telling people, man, I got smoked today. And then today was the opposite. I crushed it today. So, pretty happy about that. With that said, today, like I'm saying, is kind of the opposite because you look at these indices here and they don't look too great. I know Pat was on the radio through the VTF in the last, half hour of the day talking about how the S&P might be due for a date with the 50. Obviously, we've seen a little bit of is pulled back to the 21, but definitely felt a little bit weaker, down 0.5 percentage point on the day. I think my screen just popped out for a second. Down 0.5 percentage point on the day in the S&P. But again, it almost felt like the opposite, where a lot of the stocks that I'm in performed really well. I got great follow through on Coursera that we were buying yesterday off the support area. Someone even asked me about this in the morning meeting. I was like, it needs to, like today or tomorrow, get back to that 3750 zone. And that's also where I was telling people in the VTF, like, between 3750 and 38, I think is going to be a good spot to be able to book some profit off the support level in that Coursera. So that's one that I was decently heavy in. So that obviously paid me pretty well. Doesn't look like anything like the market today. That Bed Bath & Beyond, which had me nervous yesterday because it got below 25, which was kind of a key support level. And that's in the face of like AMC and GameStop performing a little bit better, and those meme stocks. Bed Bath & Beyond was able to kind of recapture 25, so that did pretty well. SoFi was green today. It pulled back into that equilibrium area, but it held the $15 yesterday. That was where it broke out from, and kind of had a strong day today. So that one also kind of continued to pay me, which I was pretty happy about. Even our MGI that a lot of us focus on. MGI was trying to catch a bid today, got back above $9. There was one decent little volume spike here where it ticked above 9. This 9 has acted like a wall for it. It needs to really start making a market above 9, getting above this 21 EMA, and the bigger resistance is $10 that it really needs to get back above. But still, MGI put up a fight. Fubo that I've been in, Fubo got really close to stopping me out. I've been using this day's low as my stop, which is 27.59. Today's low was 27.92. Again, market was pretty weak today, kind of across the board. Even IWM's not giving a great daily candle, but this Fubo was able to catch a nice bid. That one paid me pretty well. Roblox, I'm still in from 80. This was able to be really strong. I keep talking about how Roblox needs a close above 86. It was able to do it. Sumo, which I'm in as a swing, is upticking here after hours. You know, I was trading this from 4 o'clock till basically the meeting started, was able to capture this move and sell stock basically at $22 here after hours. Now it's come back down, but that Sumo is kind of like the icing on the cake for me. You know, from a day trading perspective, Josh made me really good money on this BGFV. I liquidated this position in the close, just you know, for portfolio management purposes. But this BGFV, Josh called it out like right here on this candle. I was able to scoop up some stock. I don't even really know exactly what was going on with it, but I saw the tail here with the volume increase, and I said, you know what, I'm going to get involved in this thing. And I really just used this low. I didn't even give it to the low of 26.60. I just gave it to the low of 26.84 as my entry point when Josh called it out. So that enabled me, the tighter risk enabled me to have the the tighter risk enabled me to have more tier size. So the move into 30 bucks on that was also kind of money for me on a day trading perspective. Root, we've seen that big option flow come out for the last couple days in a row. This one was a little bit more of a struggle. This Root, we saw the option flow come in yesterday, it gave a great move. Today we saw early option flow come in as well, so I got involved in it. It kind of really ran into a wall of selling here at 660 for a period of time before finally kind of breaking that into the close. Not a fantastic close with this Root, but given the option flow, given the volume that picked up the last couple of days, I was able to make a few bucks in it today and kept that as a new swing trade that I have a position in. So, I was able to make a few bucks there for myself as well. The one that I missed that I talked about in the morning meeting was just a little bit too cheap on the entry price was this BLDE. I've spoken about this blade here on a number of morning meetings recently as a trade idea through 9, and I actually love the technical trade setup coming into today if it would have broken through 9. The bullish consolidation in front of the resistance, the tail 2 trading sessions ago into the ADM and the daily, followed by this inside bar. I would have loved to buy through 9. Had news pre-market that caused it to gap up really big. And what I was saying pre-market was, if I could get some stock, this actually goes back to yesterday's afternoon meeting. I forget which stock we spoke about in yesterday's afternoon meeting that had a really big gap up. And the question you got to ask yourself, when we were chatting about this in the morning meeting, I was like, oh man, I hate that this is at 980 or whatever right now, because I might be willing to pay up 25, 35 cents with a $9 stop loss in BLDE because I think that this thing could work its way up to $12 over the course of a few days. I might be willing to do that, but I'm probably not willing to pay up 80-something cents. The risk-reward then is just not as good. So by the time it actually opened, it opened a little bit lower. It opened in this 950 area, and I basically put out a bid in the mid-930s here kind of off the open, because sometimes you just kind of have that little opening volatility when the market's thinner. You get like one quick seller because of the gap up that can sometimes fill you on that bid, and then the stock runs. I didn't quite get filled on that. Low was 943 off the open, and it actually pulled in and made a new low here, which is kind of crazy, before then ripping to new highs and actually closing pretty well at 1050. So the BLDE I missed. A couple of other things that I was not involved in that we discussed as a team in the meeting today. One was this the Love Sack. Love the name of this company. Someone told me that they make furniture. I don't really know what the deal is with that, but the Love Sack here, we were talking about, what price was I talking about in the morning meeting? 57.50? I think it was 57.50 that I was talking about. This was actually a really tricky trade off the open. I think a couple of you guys caught it. I didn't. This opening candle, so it's like I said before, sometimes you get that opening volatility or an opening seller that kind of comes in on the earnings name, but then the real direction is the direction that you were looking for originally. They hit this thing so hard on this first 5-minute bar that I actually took it off my radar. But this was actually a great setup in the second bar with the inside 5 and up as the 80, with the initial price correction here to the 80 MA on the small time frame. So I actually ended up not getting involved in this, but I know that some of you guys caught it. You could have been in on the break of the inside 5-minute bar on that second bar of the day there, or you also could have been looking at that. Again, the 5750 was really the more daily spot that I think we were speaking about in the morning meeting. Either way, if you're able to capture this, it worked out really great. Really good earnings trade. I thought the numbers on this were solid. So I know a couple of you guys caught the love sack. So great job on that one if you caught it. GEVO was another idea from the morning meeting today that I was not involved in. I think a couple of you guys caught. Greg, I think you caught this one. So fantastic job. Someone called out in the VTF right in the beginning of the day, like, guys, we had already spoken about this in the morning meeting, and then someone spoke out into the VTF. I love that communication. Guys, check out the opening volume in GEVO. That opening volume, that's one of the big signals that we're looking for to really let us know that a stock is in play. Look at the volume in this GEVO versus like yesterday or versus almost any other typical day. And this is a stock that's actually been in play a little bit, and the volume was just so massive, so early. It is, kind of exactly what we're looking for. And great job, Greg. Great job for anybody else on the team who caught this. Look at the follow-through on that opening buy. It's exactly what we want to see. So it's an interesting market today because it almost feels like the opposite of the way I've been feeling on a lot of other trading sessions recently, where today the market, you look at these daily candles in this market. Okay, fine. It's obviously still a bull market. We lost maybe the very upper level, first level of consolidation support that the SPYs were providing us, but we haven't even lost the 21 EMA. We haven't lost the pivot from August 26th. We certainly haven't lost the pivot from August 19th. We're still in a clear and utter uptrend here for the S&P. We do have some seasonality issues here at the beginning of September. Maybe somebody can remind me what that trader saying is, like, you sell Rosh Hashanah and you buy the other one. I really don't know. So we do have some seasonality stuff against us. SPYs here not looking too fantastic. Q candle. Is Q's an inside day today? Yeah, Q's are an inside day, so I wouldn't overread that. IWM candle, even though the IWM had good relative strength today, I was excited when the IWM was back above 225. This is not a great looking candle. I was excited when the IWM got back above 225 because I was like, oh, you know what? They just dipped it below 225 for this one day, shook some people out. Now we're back above. We're also showing relative strength. That's exactly what I want to see from the market. But we didn't close well on this candle. This tail here is an internal candle that you don't really want to see if you're looking for this market to recapture that 225 pretty quickly. It's not great. So again, some of these stocks I'm looking at were given the moves I wanted, gave these really strong bounces, and then I look at the indices and they're not great. And that's with AMC being my worst name on the day today. I'm still light short on this. You would think market's bearish. IWM couldn't really hold its bid. Maybe that provides some weakness over to AMC. Nope, not what happened. AMC also really strong, still looks good. We know GameStop had earnings this morning, or last night, I guess, actually. The earnings report was not a fantastic looking earnings report. And look at what, take it easy, and look at how they bought this GameStop back up. I mean, that's also just incredibly bullish. I didn't think that they were going to be able to buy GameStop up to the degree that they did today, and they totally did. So it's showing you that even in the face of some of this market weakness, some of our animal spirits are actually intact and alive. And I can't complain about this market. Sell Rosh, buy Kipper. Thanks, Diego. Sell Rosh, buy Kipper. Thanks, Oriel. Again, market looking a little bit weak, but I thought today was a great trading day. I thought we did a fantastic job as a team. We were focused on the right stocks. It led to me having a really great day where I kind of crushed it after having two not as great trading sessions to start my week off. So, I know that some of you guys did great also. here in the Pro Desk VTF. So it's awesome stuff. Happy to answer any questions that anybody has. That's all I got to talk about. I gotta be out by 5 o'clock today. Just to throw that out there, I gotta go to my brother-in-law's an artist, and he just did something for Oakley. So I gotta go to Oakley's shop in Midtown after work today to go see the new art display thing that he did. So I got a hard cut off at 5 o'clock today, but I'm happy to answer as many questions as possible for the team. Just scrolling up here in the VTF. Yeah, that BLDE for sure, when it broke that opening low, is difficult. If you kept the stop loss down at lows, down at the $9 breakaway gap, it would have been fantastic. Getting some feedback that the love sack, I can't stop. The love sack had a wide spread early on in the day. UPST, yeah. So the question here from Steve: UPST has been a monster for a month now. Why? Does anyone know why? I mean, look, this move is sick. I'm in the wrong financial startup. I've been focused on that SoFi. SoFi hasn't been able to catch a bid. UPST's been fantastic. Actually, I guess SoFi has been a little bit better, and this lending club has also been performing better also, but not as good as UPST. I mean, look, this UPST had a phenomenal earnings report. Was it so phenomenal that the stock should go from 160 to 290 over the course of less than a month here, basically straight vertical in that short period of time? I don't know. I don't think so, but the market's smarter than me. I mean, this is a name here that's gone parabolic. This is a name that we've been reporting bullish option flow. We've been reporting bullish option flow into the VTF what seems like on a day-to-day basis. This UPST has just been phenomenal. I mean, and some people have been chatting about trying to short it. The thing about taking those counter trade, counter momentum shorts is that they're very dangerous, and you really want to make sure that you have your signal to be able to do it. I try to be very, very selective when I take that type of trade. I always want to be shorting it on the way down, not on the way up. You got to be really careful with it. Tier sizing is important also, and making sure you have that stop loss in place so that your risk doesn't get out of control is also really important, because you easily could have looked at this thing at 240 and been like, oh my God, this thing just went up $80 in 2.5 weeks or whatever, and it's up way too much and it's extended. I'm going short. And now here you are another $50 later, probably having a good cry somewhere about all the money you've lost if you did not manage your risk properly. So that's why risk management's key. But Steve, the only answer I got for you is my half sarcastic, half serious answer that I love to give to people when they ask why a stock is up a lot or why a stock is down a lot. The reason why it's up is because there's more buyers than sellers. Whether those are shorts getting squeezed or new longs coming in the market, it's probably a combination. That's all I got for you. There's been more buyers than sellers after a pretty solid earnings report. So we'll definitely be continuing to monitor this one because it's been an incredible move. Diego hitting us with a little history. The Lehman bankruptcy was on September 19th, 2008. So we got anybody here who is part of the Lehman Brothers risk management team? I certainly hope not. Yeah, so and any other questions, guys? It's I said I got a hard cutoff at 5. It's only 4:30, so I'm happy to chat about anything you guys want to talk about. Diego said, I used to work at Lehman. The place went under after I left. You were they weren't paying you enough, Diego. You're the only reason why Lehman was staying afloat. You should have increased that salary of yours. Maybe we'd still be trading their stock. Thoughts on NVIDIA? Oh, you guys are too funny. Thoughts on NVIDIA? Yeah, NVIDIA looks solid. The semis concerned me a little bit with yesterday's price action. NVIDIA did not break down yesterday. It tailed down to support and held it, which is fine. AMD's candle yesterday I thought was a little bit more concerning. I know you asked about NVIDIA, but let me talk about AMD for a second. The concerning issue I'm seeing with AMD right now is that this thing has tried to break out of what I would call a bullish consolidation on a couple of occasions now, and each time it's tried to break out and go, it's actually failed. And that can potentially sometimes be a bearish signal for the stock. A breakout failure can actually sometimes lead to lower pricing. It tried on this day, back on August 13th, which I thought was a little bit too early. You know, pulled back, price correction, 2 days of consolidation, inside day, tried to break out, failed by the next day. Created a deeper pivot, built out this wedge further, and then tried to go again on the day when we as a team, I know a bunch of us were buying this early on August 27th, myself included. One big day, second half day, leaves a little bit of a topping tail. Okay, fine. This candle's not terrible. Pulls back to the ADMA, tries to create a pivot low. Good. And then it loses this pivot low, and it loses this Maribozu low. That's a second failed upside attempt. The problem when you have a couple failed upside attempts here is it begins to trap longs. And at a certain point, trapped longs will begin to puke stock down. And now yesterday, AMD really kind of gave you a failure candle where it got below that bar. And then today was a weaker inside day. So AMD is not looking great to me right now. And could even be, dare I say it, because it's still a bull market, could even be a short setup for tomorrow on the break of today's low if we start seeing the NASDAQ actually break down a little bit further. NVIDIA is still more fully intact. NVIDIA, not as weak of a day as AMD yesterday, though it did tail below its last kind of green Maribozu where it had that pickup in volume. So NVIDIA is still intact. We do want to see this NVIDIA, hold 219.77, the pivot low from yesterday, or at the very least, hold these lows in here. This 217 quarter to 217.90. But you start really losing that like 217 area in this 21 EMA and yesterday's low, then you might have problems with it. So NVIDIA is still intact, though today's candle was a little bit of a weak inside day. Again, NASDAQ was also a little bit weak. Maybe I'm overreading this. It is still clearly in a bullish consolidation overall. But when you look at what AMD is looking like right now, that can give you a little bit of potential concern on semis as a space. And then maybe NVIDIA then ends up losing its support if AMD breaks down further. So NVIDIA is definitely the better looking one between the two of them. Sorry, I lost my place here. Okay, there is NVIDIA from Jorge. From Indiana Dave, my man. Do you think that SPRT and BBIG have any more room to run? I was able to trade those both for gains today. Sure, so let's take a look. SPRT. Yeah, so I mean, we spent a decent amount of time talking about both these stocks. This is really where the short squeeze world is focused right now. The thing about these types of names is, can they go higher? Absolutely, they can go higher. They can definitely squeeze them. I mean, literally, the definition of momentum is the higher the price, the higher the demand. The greater the price, the greater the demand. What that means is a lot of times with these types of stocks, the more they go up, the more that they actually can go up. There's a couple of concerns that you want to have also, though. One is, if you're not already in it, which I know it sounds like you are, which is great, if you're not already in it, you got to be concerned about buying things that are very extended from their equilibrium. That inherently means that you kind of have a worse risk reward on the trade if you're kind of only getting in now, which doesn't mean that they can't continue. It just means that you want to definitely make sure you got your risk management in place with these types of things, because I don't know these companies really well, but you can definitely make an argument at a certain point that they don't belong at the price in which they're trading. So you got to really have that risk management in place. And I'm definitely not saying come in and short them. I'm not saying that at all. If you short these, they could blow up your account if they continue to rip higher. But you got to have your risk management in place. You also got to be a little bit careful when you swing trade these, because what we see with these sometimes, and we saw it happen with this ANY, and this ANY does look better as well. This ANY had this big day here on huge volume on September 2nd. Stock had just basically gone from $3 to over $9, closed at $9.50 that day, went to a high of $12 that day. And then the next morning, the company comes out and they say, all right, we're doing a secondary offering to raise more capital. So what a smart CEO does in a growth company that's losing money, and I don't know what the fundamental numbers of SPRT or BBIG look like, but I'm going to go out on the limb and probably say that they're not profitable companies. So what a smart CEO or CFO does when you have these companies that are having these short squeezes and that they're ripping higher, that they're meme names or whatever it is they utilize the share price as an opportunity to raise money. That's exactly what this ANY did. But what that oftentimes does is it slams the stock. ANY closed basically at $9.50 this day, opened up the next day at $7.17 and traded, down to $5.75 here before now the last couple of days it caught a bid. AMC, what stopped AMC when it had this big rip was that next morning they announced a secondary offering where they were using the share price to be able to raise capital. Again, look, that's good management. And part of the reason why, the AMC CEO, he tries to make himself sound like the leader of the apes on Wall Street Bets. All he's doing is he's trying to get his stock price higher so he can raise more money. That's called being a good CEO. So you definitely have to be careful about the overnight risk on being heavy long these meme stocks when they're running, because if you announce a secondary, just ask yourself, would you have been okay if you swung ANY overnight, you kept it overnight from 9.50, and the next day it opened up at 7.20? Would you have been okay? And if the answer is that you would have had so much stock that you would have been in a really bad spot, you got too much stock. You also, of course, have to ask yourself, what is your price? How much money did you book? Maybe you're an ANY from $7 on this day. You sold 3/4 of your position into this move to $12 because why not? And now at 9.50, you're like, all right, I got 1/4 of my position. If it gaps down to $7 tomorrow because they announce a secondary, well, guess what? I'm still making money in this, in which case, by all means, go for it. But you're looking at this BBIG, you're looking at this SPRT, it's the same question. If this BBIG announces a secondary tomorrow and it opens up at $8.75, are you screwed? And if the answer is yes, you got too much stock. If the answer is no, because you're in the money, you booked a lot of profit, you're keeping a smaller percentage of your position because it could run to 20, which it definitely could run to 20, that's the win-win situation that you want to be putting yourself in. So one of the big things that I'm constantly harping to the team here is to, as a trader, what we're trying to do is we are trying to consistently put ourselves into win-win situations. I'm actually going to make note that I should make one of these little mini video lessons on win-win, the concept of a win-win situation, because I've been doing a lot of that with the team over here. Speaking of which, check out my Twitter thing that we're doing, Derrick the Trader, not Twitter, YouTube, Derrick the Trader that we're doing, because they uploaded a new little mini lesson on there on probability, which you guys should check out. I'm trying to film those pretty regularly here, and we're going to be posting, I think 1 or 2 a week of those. Anyway, so that's the question you want to ask on BBIG and SPRT. Are you in a win-win situation where you're comfortable, where it has a big gap down because of a news announcement, you're going to be okay, but you still have stock that you want to keep to really maximize your reward if this thing runs another 100, 200, 300%, which it definitely could. So that's the answer for you, sir. Diego asking me about Yablika, Apple. I used to trade with a bunch of Russian traders, so I learned the Russian word for apple is yablika because they spoke about it all the time. Besides that, I learned a couple of swear words in Russian, but that's all I know. Apple here, same thing. It's kind of retesting its most recent breakout, which is like this 154 area. It's still above the moving average. It still looks fine. Definitely a little weaker, if you're looking kind of at the internals of the stock today. A little bit weaker. So you want to see if the inside day breaks down on Apple and the inside day breaks down on Qs tomorrow. Apple is not the one that I would want to short on that. I would honestly rather short the Qs than short Apple. I'd rather short the AMD that we spoke about if I was going to put shorts on at all. If we see a little bit of a market breakdown, Just keep in mind 150 in Apple is like that really big support level that you really want to pay attention to, and we're still $4 away from it. So today's candle for Apple, definitely not great, but it's not at the point where I'm really concerned about it yet. Jonathan asking, do you guys trade options on your desk? Yeah, Jonathan, we've got options traders here at T3 for sure. Most of the people who trade professional accounts don't trade options at T3, and I'll tell you exactly why. So most of the guys in my Pro Desk virtual trading floor here and most of the professional traders here at T3 are equity traders and not options traders. And if you're a directional trader like I am, I personally think that that's the move. My thought process has always been, why do I want to trade options, which are a less liquid product and subject to time decay, for capital access, which is the #1 reason why people trade options in a retail account, when T3 has already given me as much capital access as I could ever want. So most of the people at T3 who trade options, they're doing it because they're looking to implement some sort of complex option strategy, like spread trading, that cannot be replicated in the equities market. That makes a lot of sense to me. Or some of our big accounts, they have options access because they like to sell, covered calls for cash flow purposes and for risk management purposes on their bigger swing positions, which also makes a lot of sense. But yeah, we absolutely have options trading. If you're interested in being a trader at T3, reach out to info@t3trading.com. Next question from Kyle. Do you think Apple will push substantially higher when the Epic verdict is released? I have no idea, Kyle, because I don't know what the verdict will actually be. I don't think that it's going to have an effect on the stock, but I don't think that it is going to have a massive effect on the stock, just because Apple makes money in so many different ways. With that said, a lot of the price appreciation in Apple over the course of the last, 2 years or so now, has actually come from multiple expansion. And part of the reason why it's had multiple expansion is because their services business has performed better, and their the Apple Store is part of their services business. So if the Epic verdict is a failure and that negatively impacts the store, which impacts the services business, it could lead to some multiple compression for Apple, which definitely, would be bearish and could bring you down. And then the opposite is actually also true. You get rid of that, if it goes in Apple's favor, and you get rid of that headwind, it could lead to a decent pop as well. I don't think it's going to be so huge of a move, but it should have an impact, and I have no idea how that verdict is actually going to go. So we'll just wait and see. Next here from Fabio, just have a reference in your experience. How many risk units per month do you consider good professional and retail trader? How many risk units? I don't really think about risk in terms of that concept, that term, risk units would be the first thing that I would say to you. But I understand why you're using that term, because everyone has a different account size, and one risk unit might be different than another. So I don't really even know exactly how I would define the term risk unit. I can tell you what I like to do, and I actually did a little video on this today, is I like to look at risk in terms of what I call risk skew. I think that risk skew, that term, that concept, is a really important one for overall trading profitability. So risk skew is basically the concept of risking more in better trades and risking less in trades that aren't quite as good, pretty simply put. But the way that I teach people to do it is via a grading system. So your grading system should be based on the concepts of risk, reward, and probability of success. So, risk reward is pretty simple math. The more difficult part of the equation is probability of success. So when you're looking at probability of success in trading, you look at it in terms of what we call layers of probability, which actually the video that went live on my YouTube channel that you guys should all subscribe to is actually on layers of probability. So watch that video and it'll give you a better idea of kind of the concepts I'm talking about here. But like an A+ trade, so you're grading your trades, an A+ trade is one that has a fantastic looking potential risk reward and has as many of those layers of probability on the side of the trade as possible. So you got a great risk reward and you know, a very high probability of success. So that would be one where I put my max risk on that trade, as opposed to a trade where, you know, I think I could still be consistently profitable on this trade in the long run, but my risk reward is not quite as good. My probability of success is not quite as good. So so this is a C+ trade. So it has like a lower amount of risk units that kind of go to it. And then I guess to further answer your question on like how many risk units I would put on a day, or in a month, it actually depends very much on the market environment. So another one of the things that I preach is that not all days and not all market environments are created equal. Certain market environments are giving us a ton of opportunity, and when there's a ton of opportunity out there, the only way that you're going to be able to capture it is by being aggressive. That means trading a lot. And there's other market environments out there, honestly, like what we saw the last kind of couple of weeks, where there's just not as much opportunity out there, and you need to teach yourself to be able to sit hands off. So the market environment that you're looking at, if you want to think about this concept of risk units, which is, again, it's a little bit of a newer one to me. It's not really how I kind of look at it. But if you want to think about that, you're going to be putting on a lot more of your risk units in a market environment that's more conducive to opportunity than one that is telling you, you know, market's looking like a coin flip today, and I should be sitting on your hands a little bit more. So I actually think that your answer should have a large variation to it depending upon those factors. Next here from Marty Clack. Let's take a look at the weekly on Clack. Weekly on Clack is looking solid. Let me read the rest of your question. Always holding 8% above the 21 EMA. I like how you're looking at that in terms of percentages. I'll get to your PS in a second. Yeah, so this Clack looks solid. It looks really solid. This week's off to a good start. Obviously, your big weekly resistance is up here at around this, like, 357 or so. So we'll continue to pay attention to that. So obviously you have a bigger consolidation here that's been going on for the entire year. I love when these types of charts actually start to build out smaller consolidations in the upper range of the bigger consolidation. That can oftentimes be a signal that next level of a breakout's actually occurring. And it's not quite fully doing that yet, but you can see it's trying to. You have this higher low that's coming on the weekly that's starting to build out this kind of upper level consolidation within the confines of the bigger level consolidation. So it's definitely looking productive. It's what you want to see for continuation. So yeah, let's continue to monitor that one. I don't trade Clack too often, but it looks solid. PS, I was Finner Series 763 and 8 and 9 licensed, and I interviewed at Bear Stearns 2 weeks before they collapsed. Wonder why they haven't called me back. I actually had a buddy of mine who got hired at Bear Stearns like a couple of months before they collapsed, and he actually got like a really solid severance when they got JP Morgan bought him out. Is that who bought them out? And I remember he got let go in that period of time, but they gave him a solid severance, and he was only there for like 2 months, so he was just like hanging out doing nothing. Next here from Robert. Don't remember, as I was not that experienced in the past, but short squeezes happen that often in the past as well as they are happening these days. It's kind of annoying to see how much money flow we spend on that stock these days. Okay, so basically the question from Robert here is asking me about short squeezes. So, a big thing that we've been doing recently, and look, this is the constant evolution of the market. I could go back to you guys like year over year here in the market, and I could like regularly tell you kind of the theme or the story of that market environment from that time. This is a thing that is constantly evolving on a year-to-year basis or a month-to-month basis. We're dealing with different types of market environments where the type of opportunity evolves. Recently here, we've been really focused on trying to find the next short squeeze because it just leads to huge potential opportunity. And we've actually done that pretty well on a number of occasions. On a number of other occasions, I've been a day too early, which stinks, but it is what it is. And that's just been that environment. I do not remember, short squeezes like what we're looking at ever being as prominent in my career as they are right now. I mean, yeah, have there been cases of it? People like to talk about the Volkswagen scenario, which, Volkswagen's obviously not a U.S. company. Have there been other short squeezes in the past? Yes. I've never seen stuff like what we've been seeing over the course of the last year. I've never seen it happening with the consistency that we've been seeing happening with it right now. I've never seen this market environment before where we can be focusing on this. And there's so much data, right? Like, God forbid you're in that stock that's got that 30%, 50% short float on right now because they might be coming after you. And every day we're looking at the data on, guys, anyone know what the short interest is on this stock? What's the short interest on this stock? Like, I don't remember ever doing that before in my career. But, we got to go where the money is. And that, in a lot of ways, is where the money's been. Next here from Ernest. I'm starting to run out of time, guys, just so you know. I only got about 10 minutes left because I do got to get out of here today. What do you think of UPS? Thank you for any commentary. A bit of a pullback to support. Yeah, let's take a look at ups, big ups. Whew, I don't like. I still have my weeklies up. I don't like it starting to lose this 189. Let's take a look at the daily chart. Yeah, I remember they got hit back down. I think this was an earnings report. I remember they got hit back down pretty hard on that. I don't like that this is losing this like 190 support. 200 days at 184. You have a gap fill down to 180 that it's into now. I don't think I'd want to be involved in UPS as it first breaks down into this gap. 180 is big potential support where you could start looking at it. I don't really have a fundamental case for you either way on UPS. But on the technical case, I think I would want to stay out of this while it's in this gap. This is not a good candle for this. It's also a little bit extended. So maybe this thing has a quick snapback to get back above 190 and this just becomes kind of a shakeout. I kind of talked about that concept earlier, and that can actually get this thing going again. So you want to see this thing recapture 190 very soon if you're bullish on it. And otherwise, you probably want to be out of the way as it's in this gap, and you could relook at it at 180 or as it resets up. So yeah, that'd be my opinion on UPS right now. Next here on Fabio, do you look at the VIX? Yeah, we look at the VIX all the time as a team. I don't like trading the VIX products because the VIX products are garbage, but we pay attention to the actual VIX for sure. One of the bigger ones that comes to mind is exactly a year ago. The team and we called out this top at the end of August, beginning of September perfectly, and one of the big things that we paid attention to was that there was a deviation in the VIX and the SPYs the last few days here as the SPYs went parabolic. As the SPYs went parabolic, the VIX was going up with it. It was a signal that we really wanted to get away on our long assets and start hedging ourselves, and we actually did really good with this sell-off here in September of last year. First on the sell side of it, and then actually very quickly on the buy side of it half a month later when some of these stocks had washed out, like Apple went down so huge in such a short period of time. I had Apple from 104. I had stock in Apple from 104 on this day, and again, part of this comes from initially with the VIX. I bought Apple at 104 that I didn't sell that stock until 147 or so here just a few weeks ago, which now in hindsight is looking like a mistake. So yeah, it's something we pay attention to. I'm a big advocate of not being in VIX products for any longer of a period of time than like a day trade or a relatively short swing trade. And that's just because all of the VIX products like VXX, UVXY are absolute and utter garbage because they're subject to time decay. Yeah, you can get pops in these things really fast in a really short period of time. I think I was involved in this one, actually. I think I bought UVXY pre-market here on January 27th, caught this pop-up, sold some stock, and then got stopped out like on this day pretty quickly, February 3rd. You got to make sure you got your risk in on these if you're ever long in them because they eventually will fail. by the inherent nature of the product. Look at this thing. This piece of garbage, was $200 million, but it's subject to time decay. You cannot own these like long-term in your IRA. That's terrible. But from a short-term trading perspective, fine, go for them. I prefer to short these because what's going to end up happening, and I'm actually short some VXX right now, very light, but I'm actually short some VXX right now because if the market goes sideways, this is going to go down. If the market goes up, this is going to go down. If the market goes down, this can even go down, as long as it depends on the speed, right? And the VIX products can have a really big pop in a short period of time because when markets sell off, they usually sell off very fast in a short period of time because fear is a stronger emotion than greed. That's your question there, Fabio. Indiana Dave, I cashed out of both of those stocks looking for a possible reentry. Yeah, for sure. Pay attention to it, but just be careful of the extension. David here, opinions of EDR. I'm not sure about what EDR is. What is EDR? Endeavor Group. I've definitely heard of this. I'm struggling to remember what it is, though. Looks like it was a new issuance here in April 2021. So you can ignore this other chart data. Technically, this is looking good. I like this turnaround. This is a reversal of trend. It's now trending higher, was trending lower. This is a good-looking consolidation. ADMA now is caught up. Yeah, we can pay attention for this. Good close today, by the way, also, in what was otherwise a not great tape. Not really sure what this EDR is. I'd like to do more research on it because the chart here looks pretty solid. Needs to clear up on these tails. So actually, I think you could look at this long initially above like this 2750 area, like the highs from the last 2 days, and then clearing 28 becomes big for you. So good-looking chart there. Thanks for bringing it on. What's my opinion of the UFC? You mean broadly in general? I mean broadly in general. I love the sport. Really big fan of it. I'll tell you what I'm not a fan of right now that we're seeing a lot of in kind of boxing and UFC. I'm really not a fan. I understand why they're doing it. I'm not a fan of like these celebrity fights that they're doing. Like, yeah, fine, like it was cool. Like we brought back Mike Tyson for that like little fight or whatever, and then we brought back Mayweather to do that fight against whatever his name is, and then just that the other day they had the boxing match with who's that, Logan Paul or whatever his name is versus the UFC guy. I'm not watching any of that. They got to build up some of these fighters. Because obviously you got like McGregor with the broken leg, and honestly, once McGregor made money, and I said this was going to happen too. Once McGregor had the Mayweather fight, his career was over. He made too much money, and now he's just trying to make money, but he hasn't been the same since. So I definitely love the sport. It's the only sport that I really follow is fighting sports, and I follow it more as a student of the sport than as an actual fan. People are going to hate me for saying this. I can't name 3 football players. I really don't follow anything else. I follow stocks and I follow fighters. Rizwan here asking if anyone's trading AFRM after hours. I am not. Big rip here. Big rip today. I don't know what actually. I know some of you guys were talking about this one earlier on in the day today, but I never looked at it. Big rip after hours though. Steve saying Marty Clack seems pretty cheap too, given the fundamentals. The ratios are pretty good. I agree that it's worth watching. Thanks again. Thanks, Ariel. Just seeing if I got anything else on here. You should link your account in the description of the video. Yeah, that's good advice there. Thanks for that. So I guess we'll end things. I'll just kind of give one more selfless shout out to the team of people here that I'm working with, because we're trying to do more of this like social media type stuff, which I've never been too big on. So we started my own YouTube channel just last week. We got a 4th video on here, which is probability in trading. So definitely check that out, because that will talk about some of the information that we actually discussed in today's afternoon meeting. We also have the @ProDeskVTF Twitter. that we're trying to build up a little following on. 279 people so far. Let's get that number up so we can start getting some recognition there. And then again, you know, if you want to become part of the team, reach out to info@t3live.com to become a subscriber to the ProDesk VTF, or reach out to info@t3trading.com if you're interested on potentially becoming a professional trader here at the company. Have a great night, everybody. Awesome day today. Beautiful communication in the VTF. I love it. Some of you guys did fantastic today. I love when the P&L comes together. I love when you guys make me money. I'll see everybody tomorrow.